So this is the 100 years of the Dow Jones. You can see where we are right now. And this is going back right to even with the 1929 big move and big crash. And we've gone through all these. Here's the 1987 crash. And this is a massive, pretty much 100 years of the Dow Jones. And look at this big here. There is actually something that's going on. Check this out. Ready? Boom. Do you see this? 10 years, 16, 10 years, 16, 10 years. What's going on through here? And that's exactly what I want to walk you through in today's video. I'm going to show you exactly the pattern here. I'm going to walk you through everything. And this is going to surprise you because we may only have 4 years left and then it's game over for this here. So that's what I want to walk you through in today's video, guys. This is a real big picture. Traders, make sure you don't place a trade based on what you're seeing in this video. This is just to give you a bit of context of the real large picture, right? Instead of looking at the next week or the next month, let's look at the last next 5 to 10 years of the real big, massive cycles that are happening and see if there's anything repeating for the last 10 years and what could possibly happen moving forward. Also, traders, I've been advertising my Inner Circle coaching program where you can join me. I'm taking that down. Okay, I'm closing it down for 2025. This is where you get access to my top trading strategies. I give you access to my scanner where you can scan the trades. And every single week, I'm there with you, holding your hand and coaching you and guiding you. If you do really want this, guys, I'm taking it down. That second link in the description there, guys. Click on that. Go fill out the application form because I'm taking it down. And this is your last chance this year to get access to it. And then whoever's in the inside, they stay on the inside and they get access to everything from there. So go fill out the application form, guys, and then I'll be personally speaking to you. Second link in the description. So let's have a look at this through here. So one of the things that I'm always looking at is one thing I've realized when it comes to these markets and these things here. If you've been around the markets for, I would say 20 plus years, okay? I've been trading the markets now for 20 plus years. And I realized, 80% of the stuff out there when it comes to indicators and all that sort of stuff, a complete waste of time. They confuse you. They don't really add any probability, and it just doesn't help you at all. That's why whenever you look at this here, this is a blank chart with a chart and just a couple of moving averages on here. I promise you, right? All you need is what? Really to straight away we have a 50-50 chance, right? Look at the probability of success. Straight away we have 50-50 chance. Now, then if we just add some simple trend analysis, highs and lows, now we've increased that what? To 60%, 70%. What if we started to overlay then say this blue moving average, which is my 50 moving average, or actually I normally like, this is a 50 here. Let's actually change this so I can keep it in the context of being truthful for you guys. 52 moving average. I use the 52, not the 50, okay? 50 is outdated. 52 is the new thing. It doesn't really matter anyway. It's just the two. I've just used the two. Now, where I learned the 52, just so you know, and some of you guys have been watching my videos in the past, where I originally learned the 52 moving average was one of my very first mentors. He started trading, $5,000 trading account, blew that up. Second trading account, $5,000, blew that up. The third time he went and traded, but he went and actually got access to a mentor who was making roughly around $40,000 a month on average, right? It wasn't like that every single month, but on average. And he learned a lot of things from him. That guy was named Simon, right? So my very first mentor named Kim. Kim's mentor was named Simon. So when I learned from Kim, now Kim, by the way, first trading account, 5,000, blew that up. Second trading account, 5,000, blew that up. The third trading account, he came back with about 5 or 10 grand, and then he grew that to about $3 million in 5 years. So that's where I actually went to learn from Kim, and that's where I originally learned a lot of this stuff here, right? And then I said, Kim, who did you learn off? And he told me Simon, and then I didn't get access to Simon directly, but he wasn't teaching at that time, but he did have access. I could find some old training and coaching programs and educational programs, like there were DVDs back then and videos, where I could get access to a lot of his training that he used to do in the past. He's just a private trader right now. He doesn't really do anything in the public, especially at that time. And I went and bought everything I could from the internet, from eBay and all this sort of stuff, where I could actually buy it. And then I originally learned that he used the 52 for this here. And what he used the 52 was for wherever the market was moving here. And this is just the reason I'm saying this here is I'm trying to show you, one, how simple trading can be, but two, you then overlaying all this other stuff, then it creates confusion. Originally 50-50 chance. Secondly, if we then start to add highs and lows, if we're in an upward trend like this here, we're clearly in an upward trend, well then we know you're just taking a 50-50 probability and turn it into what? and turn it into maybe a 60%, 70% probability, right? And then if you want to overlay just the moving average, and if the moving average is trending up through here, well, then you're only probably going to be looking for long signals here. Now, I'm looking at a monthly chart here, by the way, guys. so if this is more long-term buy and hold, but you can use this for long-term buy and hold, right? I like to use this on my daily charts for like precise entries, but I'm trying to show you how we use it on the daily charts. And if we're ever flat through here, what does that mean? A strong trending moving average simply means we have what? Strong trend, strong momentum. So only look for longer signals. Don't be going against it. Because as you can see, the best trades are what? With the when the moving average is flat through here, which was what about 10 years, same through here, flat, strong, flat. Well, that's called flat trend. There is no trend. So there's no like, oh, this is going to have a big move. No, because there's no probability of that. And then we have a big move up through here, strong. Then what do we? We go through another what? Another big strong trending move from here, right? And then we flatten out all through here. Now, by the way, that's the .com bust and that's the 2008. How amazing is this, right? Look at this here. Look at, see how amazing this is? And the reason I'm doing this here is like really big picture. And then what's happening? Look what's happening right now, by the way, right? Look what's happening right now. We're still very strong trending to the upside. So if we're looking at probability here, right? Firstly, I'm doing this here to show you that you then adding thousands of different indicators down the bottom here. Let's add the MACD, the stochastics, the RSI, the Bollinger Bands. All that stuff doesn't make you a better trader. It just confuses the hell out of you, right? I just gave you 3 rules. 3 rules. With 3 rules? No, 2 rules. If the market's clearly making higher lows, we're in an upward trend. Now, yes, that trend will end at some time, but at least 80% of the time it's going to continue. And then that 20% of the time it's going to peter out, right? And then how do you see the peter out happening is by utilizing the 52 moving average. Because as you can see that whenever the moving average is strong, when the moving average starts to flatten out like this here and it's no longer strong trending, this flattening out period simply says, uh-oh, game over. When the moving average flattens out here, uh-oh, game over. Now again, I know I'm showing you this here, but I'm putting the context of what I'm about to show with you, this 100-year pattern, and what we could be seeing in the next, we may be all wrong about a big drop in the markets. Now, the big drop still can happen, by the way. The 1987 crash is where? Right there. What was the moving average still doing at that time? Now, I know this sounds too simple, John, and then you're going to say, but John, this time's different, and no, this time is not different. Do you know the same things happen again and again and again? Read Ray Dalio stuff, right? If you're saying this time is different, no, guys, come on, okay? Be sensible. Learn from the masters of this game, Paul Tudor Jones. Learn from Ray Dalio. Learn, and I promise you guys, right? The same things happen again and again and again and again. It's just titled, it's just named different, right? Industrial days, tractors and so on and so forth, right? The .com boom and bust. It's the AI bubble. It's the same. It's just the same. There's nothing new on the planet, right? The markets do the same thing. Same thing. So the reason I'm saying this is that firstly, if you want to jump on big moves, go with the market, not against it. And secondly, all you need to do that is one, ask yourself, really at the end of the day, just cut it down to one simple rule. Is the moving average trending up? Yes. Well, I only can go long here. Now, again, this is a monthly chart, so this is actually pretty good for long-term buy and hold. Why? Well, as you can see, that when the moving average is strong trending up, it's the trend is probably going to go up, right? Now, again, this is a monthly chart, so this here could be like, what is that through there, right? If I go back down and actually show you this here, so this is where you got it's perspective, right? But this whole video here is what? 100 years. And why there may be only 4 years left before and this is just a rough estimate and a rough guide, right? But as you can see here, and the reason why I'm doing this here is because there could be, if once we start to see the forest from the trees, then the weekly charts and daily charts, yeah, you might see these short-term little shake and bakes, right? Like what happened recently with the tariffs and so on and so forth. But what if we can keep an eye on that big move? Because if we can start to see the daily charts and the weekly charts start to set up for another big breakout, we're like, oh, that's exactly in line with that monthly chart. And now you've got the monthly strong trend, the weekly breaking out, the daily breaking out, and there's massive momentum. You get what I'm saying here? This is how you jump on the next big move, right? Anyway, so what I'm saying here is that just because the moving average, like here, look at this here. I'm using this as an example, but whenever the moving average is trending up, right? Trending up through here, trending up, okay? And then look what happened. As soon as we started to flatten out through here, now you never, again, long-term buy and hold, you never know exactly when that's going to be. But look at this here. Low, higher low, higher low, higher low, higher low, same low, higher low, lower low. So firstly, as soon as this broke a lower low and the moving average started flattening out, that's when you knew what? End of trend. See that through there? End of trend. And then we did nothing for 10, and this is actually a monthly chart, so this is nothing for 10 years, which by the way, I have something really amazing to show you just in a minute. So check that out, right? So two simple things here. Again, guys, this is where my whole thing is what? Just to simplify it. Simplify every single thing when it comes down to these markets and simplify everything for you that you are doing right now. Because, I've been $250,000 in net, guys, right? And one thing I've learned over the last 20 years, if you really want to get to the truth of it, most of the stuff on these platforms are there to confuse the hell out of you. You don't need thousands of indicators. I've given you literally just one rule, actually, really. If the moving average is still, if it's trending up, right? Not pointing up, that's pointing up, right? Not like that. But if it has been doing this here for 12 months on this monthly chart, and you want to be looking for some long-term buy and hold stuff, well, just go with that, right? Now, what tends to happen with these here? By the way, it's the same type of thing. It's the same pattern, right? You do get what? From here to here, that was 2 years of sideways movement, right? And yes, you got a lot of ups and downs and so on and so forth. And we did have a 20% drop through here. But what was the big picture still doing? What was the moving average still doing? And then we went boom, and guess what? Every single chart operates the same way, right, guys? What is this? There's two phases in the markets, right? Now, firstly, there's two phases in the markets. There's the energy using phase, aka when the market's moving, they're buying it up, right? The big boys are buying it, right? They're using a lot of energy. And then suddenly when the market goes sideways, this is where they're building energy. And then suddenly after building energy for a while, this could be like, this looks like a couple of years from here. What is that sideways movement? 1.2 years, right? Again, this is for people that are not looking at the next week, next month, maybe not even the next year, but looking at the big picture of what could be happening over the next 5 to 10 years. Because as you can see here, these cycles happen again and again and again, even with this here. So you have the energy, we have two different phases, don't we? We have let me bring on a green. So we have the energy using phase when it market's trending, energy using. Now notice when you go through these energy using phases, one, it's with the moving average, which means we're going with a strong trend. They are the biggest moves and the best moves. But then we also do understand what? When we go through these energy using phase, where it's very strong to the upside, eventually we go through these different phases. Energy using, and then we go through a period of 1, 2, maybe even 3 years of sideways movement, and then we go for another few years, and then we go for another sideways movement. See what I'm saying here? Energy using, energy building, energy using, energy building. Now, again, this is based on 100 years of data, so don't get your knickers in a knot. And, again, most of you traders that are looking for what's happening today and what's going to happen, oh my goodness, the market went down this week. This is not for you, right? This is for the big boys who really want to capitalize on some major big long-term trends and that are patient, okay? So, and then we go through what? Another energy building phase. So if you're looking to buy this particular market, when would it be best to get into the trade? After it's done a lot of energy using, or wait for a few years of this energy building, and then when we start to break, and this is pretty awesome, isn't it, guys? I love this stuff, I tell you. Wait for it to break the high, then we start this move. Again, this doesn't look like much, guys, but that's a big move from there, right? From there to there, we're looking at a 30%. When it breaks again, when it breaks this level here, I know that doesn't look like much, but that whole move from there to there was 2.5 years and an 80% move, and so on and so forth. So you see what I'm saying here? So if we're looking at probability, firstly, energy using, energy building. If we're in an energy using phase, this is for long-term buy and hold, and you can apply this to any market, by the way. I think I'm looking at this particular chart I'm looking at here right now. Let me just show you. Where is that? I'm trying to see. I think this is logarithmic chart. Pretty sure this is logarithmic chart. So anyway, so as you can see here, so the purpose of me saying this here is one, if you guys that have a few $1 million in your account, and or maybe more. You have fairly large trading accounts. This is something you can keep an eye on for, right? Apply good risk to it. But we can add a lot of fear and thoughts and doubts and, oh my goodness, Ray Dalio cycle and so on and so forth. Yeah, right? That may happen, right? But if we're looking at the big cycles of things, when would be the best time? If we go through an energy using phase, wait for the energy building phase, which might be a couple of years. And then as we start to tick back up again on this monthly chart, guess what this could be? This could be now, guess what? The start of that next move up. So you'll be looking for more of an entry through here, right? Because as you can see, look at this here. When it broke the high, big move up. 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 And what is that? All you're doing is that, okay, the moving average is strong trending. I'm going to wait for one of these pullbacks to reset, and then I'm going to get going again. Pullback, reset, pullback, reset. You could even maybe get down to here somewhere and have a stop below here somewhere or something like that. But as you can see, then what happened when the moving average flattened out? Guess what happened, right? And then boom, 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 boom. And then the market started the trend through here. By the way, this is 1987 crash. Why did the 1987 crash do this for a month? But then suddenly, many years later, we went back to the upside. Again, this is where if you want to capitalize on some really big profits, we're talking tens of millions, hundreds of millions of dollars in profits over the course of a 10 or 20 year period. This is the type of thing we need to be focusing on, right? Because you're not going to make a lot of money, guys, trading 2 minute charts, okay? Just so you know that. That's hard to do. Don't do 2 and 5 minute chart trading. It's really hard to do. You get chewed up. I'm going to be taking a lot of trades. No. Look for one trade that you could be in for 2 or 3 years and capitalize on a massive profit. Just do one trade. You see what I'm saying here? And then let the market do the things. Anyway, so when it comes down to my personal trading, that's what I do. I used to trade those time frames. Now I trade the daily charts and daily and weekly charts together. And I'm looking for these nice moves that happen over the course of 30 days, 60 days. And I'm not looking to trade a lot. I'm just looking to get in and hold it for 1 or 2 months and jump on a big move. Because if I can get that big move and I'm utilizing things like options, then I can pick up a few 100% return, 500% return. One of my best trades I've ever done was in the matter of 2 months, 1,200% return. Think about this for a minute, okay? 1,200% return on that. That's like taking 20% of your trading account and making multiple 100% return on your account by putting 20% of your trading account on there. And what if I said, if you say had a $100,000 trading account, and this is where I'm trying to show you the context of what's going on here, and then I'm going to get to all the lines that I mentioned at the start of this video for you, but I'm trying to give you the context of how you can really get ahead in the markets. You don't have to be smart. Guys, I am not smart, right? I am not smart. For me personally, right? For me personally, when it comes down to, for me personally, like I'm a coach who makes complex feel simple, right? As you can see, I'm simplifying, right? And I'm helping you break through with clarity and so on and so forth. So, because I'm telling you right now, guys, that this is the simple stuff. So let me show you what I mean by this here. And this is where it's going to give you really context. If you're intraday trading and you sign up to these intraday programs, stop it, because it's the hardest way to trade. 2 minute charts, false breakouts, all that stuff. It is the hardest way to trade, I promise you. And then the reason why you're doing that is, one, because you think that now you're a day trader. You are labeled as a day trader. That's your job. You have to sit in front of the screen and do something, because that's your job, right? Wrong. How do you make big money in the markets, right? So what I mean by this is that, and this is looking at my best case and example of what I've done in the past. If you have a $100,000 trading account and you went and put on $20,000 on a trade from there, right? Now this is a trading account here, right? And you utilize things, say, such as options. If I look at that 20K here, my maximum risk would be about 10K. So I'm risking, say, in this example, my big risk, a big loss would be, say, 10K. An average loss would be about 30%. So an average loss would be about $6,000. With me so far? So, because it's 30%, so $6,000. So if you look at this here, and again, you've got to make sure that when options, guys, here's a bit of a rule of thumb with options. Always buy close to the money, if not first or second in the money. Yes, they're more expensive, but that gives you a bit of a buffer. That's the reason why I can get out sometimes with a 20, 30% loss, because I'm buying first or second, sometimes even third in the money. Yes, they're more expensive, but it allows me to get in here. And then that's where, if the market goes against me, I can get out with a much smaller loss here. Remember I said before, it's about protecting yourself. Do not be fooled by out of the money options because they're really, really, really cheap. Oh, these are cheaper. Yeah. And you can, your $20,000, you wouldn't be able to do a $20,000, which is the 20% of your account. I'm using this as an example. You wouldn't be able to do that, right? You wouldn't be able to do this here because at the end of the day, you're nervous. Like, oh my goodness, if I trade this and the market goes against me, I could lose 80% of this overnight and potentially 100% over the next week. Well, actually, that's not true depending on the time frame. So the first thing I do, I'm always buying in the money options. Yes, they're more expensive, but it allows me to do this here. And secondly, I buy plenty of time. So if I think I'm going to be in the trade for, my average long-term trade is 1 to 2 months. So I'll buy about 3 months, sometimes even 6 months out, just so I can give it time. And my whole idea is that last 1 month, I typically want to be out of the option because that's when the time decay hits me the hardest. So I buy plenty of time. I buy in the money options. And then obviously on top of this, right, I'm getting into a really good trade that's likely to make a big move. Make sense? So that's how I personally trade options. But again, it all comes back down to the setup and then utilizing this here. So the reason I'm saying this here is, again, if you're looking at big long-term trades and how changing my thinking completely changed everything for me. And that was this $20,000 position here. If I was in it for 2, 3, even 6 months, I was in it. But that $20,000 made a 500% return. What is that? That's now what? $100,000 profit, right? $100,000 profit. That's 100% growth on my account. And all I took was roughly around a 6% risk on the account on average. Again, not exact. It could be less, it could be more. Because what? Because remember, that's this back here. That's my risk. Why? 20,000 is 20%. Because I'm buying first or second in the money, I'm getting into good trades in the first place. And I know that if I do have a loss, that maybe around 30%, maybe more, right? Maybe more. Maybe even if I do, again, so around about, say, 6% of my total account was at risk on average. But from a $6,000 risk, I end up making a $100,000 profit. Do you see what I'm saying here? Do you see the foundations? Right, traders? And again, this is the way that I coach. If you like this sort of stuff, as I said before, like I'm ending my coaching program. If you like this sort of stuff, guys, apply for my coaching program. I'll show you simple analysis along with proper foundations so you can succeed for the rest of your life. Because what you want to do is that if you had a $6,000 loss, and let's just say you had that on average, but you actually 1, 2, 3 trades were losses, and you had 6 losses, but then your fourth trade end up making you $100,000, you win. You see what I'm saying here, right? You want to set it up so even if you go through a bad winning streak. Now, again, you're not always going to get the 500% return. And looking at my best case scenario, which are a 1,000% return, that's like taking my $20,000 trade, making $200,000. It was actually 1,200% return. But 1,000% return is $200,000. So therefore, my account grew by 200% by risking 6,000, which is what? Which is roughly 6% of my account. Do you see how all this works? Do you see what I'm doing here? You see the lay of the land. Again, guys, I do not want to be in a strategy where I'm going to hope that this year is going to be a good year. Because I know I'm going to go through my really good winning periods, and I know if I'm going to go through periods where I might have a couple losing trades in a row. That's just the nature of the game. But how do I set my game up properly to where I'm getting into the right trades, I'm trade management properly, and then I apply the right risk when it comes to how much I'm putting on a trade, right? And then buying the right option so I'm not risking. Again, first or second, this here gives you what's called intrinsic value. And this is like a call option will be below, put option will be above. So if it's a call option trade, right, and you see the moving average trending up through here, if it's a call option, then I'll be looking to buy first or second below the price, and I'll be looking to buy 3 to 6 months out. But again, that's because I know my trading setups when they appear, and that's the most important thing for this to work, right, guys? It's not just I'm just going to buy that. I'm going to buy that option. That's the key to making money. No, right? I've got to get into a good trade in the first place. I could buy 6 months worth of option, but if the market goes against me 100%, I'm still going to lose a lot of money, right? If I get into the trade and the market does nothing for 3 months, so I need it. Again, that's what the whole thing about my coaching is. One, help you identify these really good trades in the first place, and then you can do whatever you want, right? You could use the monthly charts and do some long-term buy and hold. You can use the daily charts and weekly charts for some more trading opportunities and options and so on and so forth. So I hope the reason why I'm going into this here, guys, is because I'm trying to show you this whole video is about what? The last 100 years of the markets, but I'm trying to show you How do you make a lot of money for the rest of your life? Why do 90% of traders lose money in the markets? Which was me, right? By the way, right? Which was me. And now what do I mean by that? Now, by the way, guys, all I say is that I'm not your typical trading coach, right? I'm here to show you your trading breakthrough is closer than easier than you think. And that's what I'm doing in today's video, right? Over the last 20 years, I've been through the ups and downs and even $25,000 in debt. But I clawed my way back with no hype or no hope but with simple, repeatable systems like I'm showing you here, right? That I now teach to all traders all around. That's the reason why my YouTube channel is about it and so on and so forth, right? Is to teach you real trading strategies, market insights, timeless patterns, and so much more. But here's the thing. This whole video here in this whole channel isn't about just cut charts or candlesticks, right? It's about clarity. It's about confidence. It's about having those real deep conversations that and with yourself and everyone else to help you really have the breakthrough here. And that's exactly what I'm all about here. I'm trying to show you the truth, guys, of why most of the stuff out there is not the way to do it. It's not like, let me do some spread strategies so I can make some short-term income. Stop thinking short-term. My whole thing that I'm always saying to my inner circle members is I want you to have a solid system, strategies, foundations, your trading approach, the way you're thinking about the markets, so you can have a solid foundation to say, you know what, every single year I'm going to have a good year. Through the years, I'm going to have my really good successful periods. And I might go through a few months where I'm going to have some losing trades and I might not have good months. But how do I say every single year I'm going to have a really good year? And that's what I want from you. I want you to have a really good year. That's what I know for myself. I'm going to have a really good year. But it all starts with one. And as you can see, what I'm doing here is I'm trying to get you thinking differently and why 2-minute trades and you sit in front of the screen for 6 hours a day is not the best thing to do. You might want to sit in front of the screen for 6 hours, but analyze and look for those next big opportunities that might last 3 months, 6 months. Heck, you might see this here, say for the next 2 years, this is like going to make a big move. I'm going to buy a 3-year option or whatever. You know? Do they still have 3-year options? At least 2 years with options. You see what I'm saying here, right? Like there's an option, or you can just buy you see what I'm saying here? I'm trying to show you this here. And the whole purpose of me doing this here, because I'm trying to show you the 10,000 foot view of one, how simple it can be, and two, how you can make a lot of money in the markets by not risking big. I don't risk a lot of money in the markets, but I still make a lot of money in the markets. I hope you see what I'm saying here, right? And when this comes all together, when you have a powerful trading system that's likely to go for a really big run, and you learn how to identify this, then you can start to apply everything that I've done here, where you start to apply some smaller risk on here. Now, even 6% is a bit too high originally. Once you become confident, then 6% is okay. But even if you wanted to bring that down to say, drop it down to, $10,000 trade where you're risking maybe 2 or 3%. You see what I'm saying here, right? You drop it down. But I'm trying to show you this here. So that whole thing there is that through there. So I'm trying to show you that everything I'm showing you here, guys, you see how simple this is, right? Now, once again, 80 to 90% of the stuff on these platforms, I'm not even using. Let's go find an indicator, hey? Let's go to all these indicators. Let's just check out all the fundamental stuff. Let's check out the industrials. Let me actually go to the symbols, the formulas. These are different formulas we can add here. What a load of crap. One thing you can use on your chart to go from a 50-50 chance to increase it to 60-70%. And then if you can start to apply some things I've talked about where you can have big profits, even if you take 5 trades and one of those trades is big profits, you are going to have a successful year and a successful trading year. 90% of the traders, just like myself, were just like, this is not for me. And the reason why it's not for you is, guess what? You try to look for that. Your thinking is wrong. More trades equals more income. Wrong. Hold this thing here. So what I want to do to finish this video off here is I want to show you that on top of everything here, this is something that I've just drawn up with myself. And I've just noticed this pattern time and time and time. Now, this is rough times anyway, guys. It might be off a year or two here and there, right? So it's not exact, but maybe this is something that, yes, we're getting a short-term little drop here just recently. And by the way, this whole drop here was the COVID drop. Doesn't look like much, does it? What was the moving average still doing at that time? Trending up, right? So every time we've dropped, push. Have we flattened out yet on the moving average? I don't know, John, I can't see it. Okay, let me show you. Here's the moving average, right? Moving average here. Moving average there. Moving average there. And this is the moving average right now. So if you're looking at the big long-term trend, over the last 100 years of looking at these massive, massive cycles. Now again, massive cycles. Not a short-term little drop for a month or two, or a short-term little drop for a year. By the way, that's a whole year worth of there, right guys? If we're just looking at the moving average, and we do know when the moving average is strong trending up, the high probability the trend is going to continue. If the moving average starts to flatten out, like it did here, we know this bull move, right? Flattening of moving average, bull market ended. So what is the moving average telling us right now? Well, John, this time's different, It may be. But you do know, once again, there's nothing new in the markets, right? There's nothing new. And the whole thing is about, well, there's this secret sauce. No, there's no secret sauce. I'm showing you the secret sauce actually in this video. One, it's not that complicated. Two, most of the crap that's on these platforms is just there to confuse you, right? It's just not the case. You don't need a stochastics or Williams percentile or MACD to help you confirm a good trade, right? And secondly, look for trades that's likely to make big profits. Get into it, hold it for 2, 3, 4, 5 months, and try to have massive profits from that. See what I'm saying here? That's how you end up making, really good money from here. So the moving average right now, guys, is trending up very, very strongly. So that tells me that we're still in this very big bull market. Now, I've also used the 20, what's this, the 20 moving average? I've just put that on there because I wanted to see what typically happens around these very big bull markets when they do come to an end. And typically what happens is when the moving average starts to get below it from here, that's when it ends. You don't really need it. When it gets below it from here, this is the 20 moving average coming down and come below it, and so on and so forth. When that particularly happens after these big bull markets, then that's what happens from there. So if I go back to this chart here and I show you, this is rough, not the exact same. So this here might be 10, this might be 11, 12 years. This big bull market might be 17 years or something like that, but it's an average of what I'm seeing here. And so look at this here. So this big long-term chart is this. This is amazing stuff, right, guys? So doesn't mean we can't go down for a week, right? And some people are like, John, you did a bullish video yesterday and now you say the market's going to go down. This is a monthly chart. The market can go down for a whole month for 20% and still stay in the big bull market, right? This is for those people that want to capitalize, especially again, for you guys that are looking to buy and hold massively, right? And you're not looking to get freaked out by these 1 year sort of drops or 1 year sort of freakouts. Again, right? See this drop through here? That was 1987. Even though that happened, oh my goodness, freak out, 1987 crash, it's all over. What was the one thing that says we're probably, that's just a short-term freak out. Just like COVID, just like the tariffs. What was it? You see that through there, right? So, as you can see, we can see what's happening here, right? We're 12 years. That should be years in. So we have a 10-year sideways, 16 years plus going up, 10 years sideways, 16 years on average going up, roughly 10 years sideways. Now what I've done is I've calculated it from the point of where we started the bull market. So we started the bull market there and that's where it ended. Started the bull market roughly around here and that's where it ended. So it's roughly 16, maybe even give or take 1 or 2 years, right? But it's a rough estimate. Started the bull market here. So we still probably have 4 years to go to 2030 if this is still continued, because we're only roughly around, let me actually do this again. So from this point from here to here, as you can see, yeah, we're only about 12 years in. That means we probably still have a 16 or so years, gives us out to 2030 here. Now, what we do know is that because of the AI, and I know this sounds crazy, guys, right? Like, because of the AI and the way things are going, this whole here, right? Basically from 1995, like remember the 90s, the whole tech boom, right? That there went pretty vertical, right? Pretty vertical from there. Now, if you look at one thing I really want to share with you here is that when the market started going vertical, what happened with both my moving averages? This is where you start to get, this is what I use for momentum, right? Look at this here. So this is the monthly charts, but look at this here. not only was my 52 trending up, but look at the angle of this, right? See how the angle of this moving average, and let me just show you this here. So that's the angle there, and then see how the moving average started to steepen through there. See how it's a different angle. What does that mean through there? That means what? That yes, we have the 52 trending up, but the 20 is trending up through here. And that's just showing you the 20 moving average, which for 20 months is about half a year, right? 6 months. It's showing you that shorter term, the next 6 months, momentum is starting to pick up big. So if we started to see something like this, the moving average, it's showing you that we're now starting to go into a bit more of a stronger phase. And again, these are monthly charts. So that means this 6 months was sideways, okay? But it just gives you an overall view, as you can see through there. The reason why I say that is because if I go back to the charts now and I take everything off the screen, look what's happened with the moving average now. You see it? Look at this here. So we were flat for a bit, right? So the short-term moving average was flat. But look at that through there. That's the 20 moving average. And then this whole thing is the 52 behind it. Ooh. It's nice, right? Nice. Again, just the context through there. So that's what we're seeing through there, guys. And as you can see, this is what we're seeing right now. Let me know what you think in the comment section below, guys. I know there's a lot of ifs and buts. This is just an average thing. We do know history repeats itself. And sometimes what is the what's the quote at the start of the Big Short video? I'm just thinking about that. What is it? Okay, cool. That's it. Yes. It ain't what you don't know that gets you into trouble. It's what you know for sure that ain't so. And so, for example, everything that we're seeing here right now, the short term really laser down focused, may be a big issue of one of the reasons why most people don't get ahead, right? And I see some of you guys that are watching me on YouTube right now, I know some of you guys have been trading for 10 plus years, but you're still not doing really well. It's time to really become disciplined about this. Okay, the only way for me to be actually shut to shift this is I really need to become disciplined, because it's not the amount of money that you have in your account that it makes you the difference, right? You can have a $5,000 or $10,000 trading account and over a few years of doing the right things, start to really capitalize on some really big moves. And it won't take you long, even with a small trading account over the next 4 or 5 years, to potentially be in that 7-figure range, if you understand some of the foundations of what I see from here.